All right. Good morning. Maybe for some of you guys, good afternoon. And thank you, Cheryl and Laura, for letting me know that you guys can hear me. If you guys have any questions, please do not hesitate to let me know. Throw it into the chat, raise your hand. I'll definitely try to keep an eye on both of those. I know we have kind of a packed webinar today, a lot to cover. And if you do have, again, any questions, I will make sure too that I kind of notate all of the help guide articles that we're going to review just so that you guys can refer to them later if you need to. And let's go ahead and get started. All right. Oops, let me get that out of the way. All right, perfect. So year end, getting ready for next year, taxes isn't that the wonderful time when we start thinking about Christmas and holidays, and then we have to groan a little when we say we also have to start thinking about taxes and 1099s and everything like that. So I definitely want to start first with the 1099s, because there are some who that's what they're here for. They want to hear about the 1099s and the printing and everything that's going on with that. And then they may end up dropping off of the call, and I understand that. So let's deal with 1099s and the 1096 printing. So I just want to make sure too that everybody's aware that, when you enter your contractors into the system, there is the option to be able to enter them either as an employee or as a contact. They work the same way, essentially. I just think that when you enter them as a contact, you have the option to let them stay as a free login when you don't need them. Whereas an employee, they're either active or not active. And let's see. Whoops, sorry. And so if you're unsure about those, then please don't hesitate to go ahead and check out the help guide. We do talk about both of those options on being able to set up the contractors, both as a contact and as an employee, kind of their pluses and minuses. And I generally say, unless the contractor is going to be kind of semi full-time where you're using them all of the time, then I would generally set them up as a contact. Now, as those who are aware, 1099s, it is based on the payment and not on the vendor invoice. So you may have 10 vendor invoices in, but you've only paid for 5 of them. That's what will be recorded in the 1099 reporting, is based on those payments. So our help guide here does kind of talk about that and goes through this in detail. Now, when we get over to our report center, okay, and we come over to the AP reports and we start looking at this 1099 reporting, okay, the engineers have updated the 1099 forms and the 1096 forms and everything based on what is going to be needed for this coming year. Now, if you notice that when you open this up, it automatically brings up last year. So if you're trying to pre-run something this year, you're actually going to have to change it to this fiscal year as instead. But when you come in starting January 1st and you're getting ready to run all of those 1099s, this last year will be more appropriate, because then we will be talking about 2025 at the beginning of 2026. So just be aware of when you're running this. Most, of course, will be running this after December. So last year will apply to 2025. Sorry. And our drop down here automatically includes just payments. Okay, it is not including anything from fast pay or anything else, V cards, if you guys are doing that. And it does not include credit card payments. Now, those were excluded already a couple of years ago, and so our system was updated to automatically exclude credit card payments, because it is supposed to be that the credit card vendors are supposed to be sending that to the IRS, and not Workamajig, or not you. And so those were automatically excluded. However, if you are ever running this for a different year and you needed to include that because you're going back in time, you do have that option to go ahead and include those credit card payments. Now, one of the things too is that the generate button here allows for both fire and iris. Now, fire is a fixed width, and I'll never say that quickly, a fixed width format text file that you can upload. The iris is, of course, a CSV file that you can upload. Now, both of these require you to create an account with the IRS. So those who have not done it, in our help guide article, we do have the instructions in here. However, I have gone ahead and brought up, if you put into the search and put in iris, and then over here, I put in fire. Now, do note that the IRS is now saying that they're going to actually retire the FIRE format. So the text with or uh, fixed with format, the text file, is actually going to be ending. So this is going to be the last year that you're going to be able to use the FIRE system, and then everything will need to be done through the IRIS. Okay, and that is a CSV file, but you do need to set up an account with the IRS. I understand it takes a little bit of time. Not surprising. The IRS is not the quickest. And there are some requirements in here that they discuss. So you will want to make sure that you go ahead and get this set up. You have time before you have to file for next year. Okay, let's see. I think that's it for the 1099s, unless anybody has any specific questions that they might have regarding the 1099s. Again, if you have any vendor payments and you're you know, creating a payment for a vendor, and part of it is not supposed to be part of the 1099 payment, you can just click into here and put in that exclude portion. So maybe out of that $700 payment, he was actually only being paid for 600 of it because $100 was reimbursement that you needed to reimburse him for. You do not have to unpost it. The system will allow you to click on the exclude from 1099 and put that portion in. Okay. And when you do go to, let's say, generate this, and I'll go ahead and do this for this year because, of course, this fiscal year, where am I? This fiscal year, here we are, and 2025. You will be able to see that the system has been updated, to put the fields in the correct spot. I would definitely test it if you are still printing and mailing them off. But I do think there's a limitation now that if you have, I don't remember if it was 5 or if it was 10 returns, that you have to file electronically. So, but any questions about the 1099s and setting those up? All right. Well, let's move on then. We've got our big old handy dandy month end procedures guide. Now, I know you guys have probably been part of the month end procedures previously, and we think we have it down flat. If you are doing the month end procedures and you do them every month, of course, by the time you get down to the end down here for year end procedures, there's really nothing more that you need to do because you've done it monthly. So we're going to go ahead and discuss the month-end procedures, all the kind of different tips and tricks to making sure that you are in balance. What are the things that you need to look for? And then we'll go ahead and kind of talk about some financial reporting and some tips on that, and making sure that you guys are understanding what needs to go into those financial reports and what you're looking for. Okay. So if we come back here to our Today Accounting page, some of the most important information is right here at the top. So when we're doing those month-end procedures, are we making sure that our transactions, I don't know why I am tongue-tied today. I apologize. Why are making sure that our unapproved transactions are approved, making sure that we're having everybody approve things as they need to, get them going through that process, chase down who we need to. Now, of course, you cannot approve things. You cannot mass approve things, I should say, from here. However, you can click on something and either, change who the approver is going to be and or submit it. And so you can come in here and, update this, change it to the finance approver. I now can approve it. I want to make sure I get it posted and that takes it off my list. There is no option here to mass approve, but you can see who is supposed to be approving this and getting this to the right approver. Okay. Unposted transactions. Unposted transactions are very important. There's a lot of options in here that you can use the pre-posting report. Now, for those of you who do not post every transaction as it comes through, I open a client invoice, I open a vendor invoice. Let me go ahead and approve and post it while I'm here and get those taken care of. That's great. For those who have that process where they've been submitted, they've been approved by somebody else, now they come over here and you need to approve them or post them, you can do the pre-posting report. The pre-posting by account, I don't think is as helpful for me. I do things more by transaction. If I see a client invoice, I should be expecting to see, accounts receivable and income accounts. If I'm looking at vendor invoice, I should be able to see AP and, a COGS or an expense account. When I look at it pre-posting by account, my mind doesn't work that way and it gets confusing. I can see everything that's posting into accounts payable and I can see everything that's posting into, let's say, income account, but I can't spot things as easily. So, if you look at the report this way, here's everything that's going to be posting into the checking account. That's great if you can kind of thumb through and make sure that there shouldn't be something else posting in. So I tend to look at this pre-posting by transaction where I can say, okay, this makes sense. I see a receipt. It should be going into my checking account. It should be coming out of my accounts receivable and everything makes sense. That is good. If I have any issues with posting, you will actually see that error message here and it will tell you the line, what at least will show you the amount of the line that's not going to post appropriately. So if you do see something, it'll say, no posting detail or something like that, and you can see the amount of the line, and you can go out and check that invoice or vendor invoice and see what might be missing a sales account. And then, of course, you will be able to mass post from here. It is going to be based on the posting date that you have set in the transaction. So I would make sure that, you've got the right posting date and that nothing is fat fingered typed where you're actually posting something to, let's say, 2026 when we should still be posting everything into 2025. Now, I do know that some of you clients will have some transactions that you're posting out into the future, and that's fine. But I've also seen a lot of fat fingered posting where it's it's a July transaction 2025 and they're posting it July of 2026. So do be aware of these dates. So I would definitely scan them and make sure that you're not missing something. Okay. Posting work in progress. If you are posting work in progress, of course, that would be kind of more that end of the year, right before you're, looking at, let's come back up here, posting work in progress. I tend to look at some of the other, making sure all your transactions are approved and posted, because of course that's going to affect your posting of WIP. So you want to make sure that again, everything is kind of clean coming in so that as you go through these various steps, you're posting in order and nothing is missed along the way. Okay, nothing worse than finding out a week later that you have to unpost WIP because something was missed, or you have to post WIP twice and transactions have changed in the meantime. So definitely make sure that these are cleaned up and taken care of before you ever want to post. I also say let's make sure too that your AR and AP are balanced. Okay, so if you see a date here, that means that your accounts are in balance. Now, there are many times where clients have many different accounts that are beyond just the typical accounts receivable account, such as allowance for doubtful account. Now, when the system says it is balancing the account. It is balanced. What it's doing is it's taking the accounts receivable account, running this, looking at the total of your, whoops, I'm not on client invoices, looking at the total of your client invoices, and then making sure that that number matches the accounts receivable account on your balance sheet. So it's saying, do I have invoices that match to the balance on the balance sheet? Now, an allowance for doubtful account will never balance to the balance sheet because it is not entered with client invoices. It is usually a journal entry that is entered either quarterly, monthly, annually, and it is never going to be balanced. So in your system setup, in your GL settings, GL accounts for your allowance for doubtful account or any other type of AR accounts that you have set up that maybe they're employee accounts receivables where the employee owes you something. You're not sending the client or the employee a client invoice. You just know that they owe you for, return of airfare or something like that. And that is also going to be another account that doesn't balance. What you can do in those accounts in your GL is exclude it from today accounting. Now, all that does is says when I'm running this determination of whether your accounts receivable accounts are balanced or not, it's only going to take the actual accounts receivable accounts and compare those invoices and running that report against your actual accounts receivable on your balance sheet. Okay, so that way you can kind of see, hey, when I'm looking at, I have multiple accounts, but this is the only one it's really looking at, and it's telling me it is currently in balance. That's why I'm seeing the date there. Okay. Now, as we know, our AR aging report actually has 3 different reports in it. This finding the date of this last balance is only looking at client invoices. It is not looking at your other 2 reports. So unapplied advance billings is really the how much of my advance bill invoices are still waiting to be revenue recognized. It's not looking at whether that advance bill has been paid or not by the client. It's only looking at how much is waiting to be revenue recognized. So this is something that has to be done manually to check that your advance bills unapplied amount still matches the advance bill accrual account over here. So if I were to run this on the screen, so right now my advance bill accrual account as of today says, 41,536. And naturally I would be checking it more on a monthly basis at the end of November after everything's been approved and posted. I wouldn't be checking it as of today. Now I could go ahead and change this to 11/30. It's still 536. When I come over here, I can look at this as of 531, generate this on the screen. And of course, this is rounding up. This one is showing to the penny. I know I'm balanced in my AR unapplied. These are advance bill invoices that still have an unapplied amount that has not been revenue recognized. And I want to make sure that these invoices are also totaling and matching my advance bill accrual account. Now, I do have a change in the system. I'm hoping to add the advance bill accrual account here so that we can see whether it's balanced or not and keep an eye on that automatically for you. I believe that's still on the enhancements list and hopefully will be there in the next couple of months. It's been something I've been asking for some time because a lot of people will realize and they'll look to see that this is balanced and never realize that they still have 2 other reports that still need to be reviewed in their balance. Okay. Unapplied receipts. Now, some of my clients will say, I will never have an unapplied receipt. Any receipt that comes in automatically gets applied to a client invoice. I will never have an unapplied receipt. If you do have an unapplied amount, once again, okay, these are receipts that have been received and they're sitting there in an unapplied account waiting to be applied as a prepayment to a future invoice. Now, this one's a little bit harder to possibly check against your balance sheet because if you look at your system setup again and you look at your GL tracking options, when you come into your default accounts, we have an unapplied cash receipts account and an unapplied payments account. And for a lot of people, this is the same account. So you have to take into account any unapplied receipts that come in and possibly any unapplied payments. Unapplied payment, of course, is going to show here on your AP aging report, and those kind of need to be added together to see if it matches your 1400 account. So it's not as easy to double check. If you have these as two different accounts, then that's easier to double check against your balance sheet. But if they are the same account, then it's a matter of running the AR aging and looking at unapplied receipts, running your AP aging and looking at those unapplied payments and kind of adding those two together to see this unapplied account and compare it to the balance sheet. Okay. Hopefully that makes sense about the unapplied receipts, unapplied advance bills, and client invoices. Now, the other last thing I want to notate is whenever you're checking any of these reports or these views against your balance sheet, you want to make sure that you're looking at posted transactions only because, of course, each of these reports can include unposted transactions as well as posted, but when you're comparing it against the balance sheet, it needs to be posted transactions only. Yes, so I won't automatically send a link. I know that will be a link in the help guide when the webinar is finished running, and you will be able to access that link. I don't think they're automatically sent out to attendees, if I'm understanding that correctly. Okay. That's the AP side. Of course, we always want to make sure that our AP is also balanced. Now, we do not have the same option on the AP that we do with the AR side. AR allows for that allowance for doubtful account and say, don't include that in checking the balance. If you've got multiple AP accounts, each one of those individual AP accounts will have the check date. So if you've got more than one account, and there's a check date here, you're actually going to want to open this up, just like on this one. This has two AR accounts, and let's say there was a check date here, and they're two different AR accounts, and they're both valid AR accounts. You would want to click on the individual account and then find the date of the last balance of that one, click on the next one, find the date of that last balance, and it'll say it's either never been in balance, has no transactions. It depends on what you've put in there. And so you'll have to look at those individually. If you only have one account like you have here, then this check date and this one would be the same. It's going to give you only one date. If you do have multiple accounts and it says check date, you could have all of your accounts are out of balance, one of your accounts is out of balance, or if there are multiple accounts that are out of balance at the same time, it's going to give you the oldest date. So one account may say, well, that went out of balance in August. This one said it went out of balance last year. You'll have to check them individually to see which one is out of balance. There is also a help guide article that if you are out of balance, it's called troubleshooting. Let's see, troubleshooting out of balance. Now, it doesn't go through every option on some of the things that could be out of balance and why they're out of balance, but it does give you a start to what could happen when you are out of balance. And maybe you could possibly start to find some of those out of balance issues yourself. Okay. And if not, and you're still stuck, then just reach out to us and let us know. And we're going to be happy to help you kind of troubleshoot and find some of those because it does take sometimes a deep dive to start to figure out where those issues could be. Okay. All right, so that's APAR, and as we look at those month-end procedures, after we've posted WIP, we're running those balance sheet, the corporate P&L, APAR, and of course it does say, if under those you're actually seeing the current date and things, there's nothing further that you have to do. If you're not seeing the current date, then you have to start to do those troubleshooting items. Now, the accrued order detail report, and this is where I think sometimes this has a multitude of issues. One, if I come over to today purchasing, and if you'll notice, I tend to like to run the reports from the purchasing page or the accounting page as opposed to going to my report center. There is the accrued order detail report. Now, again, whether you have a different accrued order account for your purchase orders versus your media orders, you can see all of the detail directly on here. So again, if we were looking at this as of the end of November, because we're doing our month end, I'm showing both media orders and purchase orders. I can run this report. Now, what you will see is you can see here that I have a different pre-bill accrual account for my purchase orders than I do my media. So when I'm running this, I was running it for both. Now you can run it individually if you've got different accounts. I can just run purchase orders and run this and see the purchase orders. Then I can come back in and I think I've got let me do this as of today's date. No, I don't. And then I can run this, solely just for the purchase orders or the media order side. Sorry, I must have multiples in here. And I want to make sure that these match. So let me go ahead and run it for both. When I look at this total, and I'm running it for all my purchase orders and my media orders, this total should be the balance of this account plus this account if they're not the same account. If they were the same account, you're just going to see the same amount in both, and it would be, 1710 as balanced. Okay, so this top section here is actually running my balance sheet account. It's going out to my balance sheet and saying, these are your pre-bill accrual balances. I should have orders that match those pre-bills accruals. Now, my account is matched. I'm not out of balance. However, you will notice that one of the things that sometimes happens is when we enter a vendor invoice, the vendor invoice comes in for less than the order. If we forget to mark that last invoice or close this order, then you can end up with some remaining little balances out there that you're never going to get that vendor invoice for. This should have been done. It should have been closed. So when I had entered that vendor invoice, and I think I still might have it in my recents, here, 990, when I had entered this, I really should have marked last invoice. I'm not going to get another invoice for $10. And when I do that last invoice at the time that I'm entering my vendor invoice, it would have closed out that accrual regardless of how much was accrued. Okay, it would say, you're not getting the full $1,000, you're only getting 990. Let's close out everything. But since I did not do that and I forgot to do it at the time that I was entering the vendor invoice, I now have this single little $10 amount that even though my account is balanced, it's actually not accurate. This $10 in that accrual account should have been closed. I should have marked that box. It would have closed that whole order and I could have been done. So not only when you look at and review this accrued order detail report to make sure you're balanced, you want to go through and look and see, do I have any of these little trailing amounts that this order should have been closed some time ago? It was back in 2018. Yes, I should have closed it a long time ago. I can actually do that here from the accrued order detail. So again, the account is balanced. It's just not overly accurate. This should have been closed. So I can close the accrual. I can choose the date that I want to close it. So maybe I want to do it as of the end of the month. I'm going to automatically post that reversal because what it's going to do, excuse me, what it's going to do is it's going to create a $0 vendor invoice that says you don't owe the vendor anything, but I need a vendor invoice to close out this remaining $10. So I'm going to go ahead and make sure that gets automatically posted. I can say, okay, it closed it out. That $10 is now gone. Okay. And when I go ahead and look at, I think it was, let's see, this order. When I look at this vendor invoice, whoops, not the vendor invoice, it closed the line for me. Okay. And, oops, pick the wrong one. And oh yeah, I was right. There's my order, or there's my vendor invoice. There's my order. Sorry, I am just, and it said this was what was applied to vendor invoices. And if you noticed, it created a $0 vendor invoice. It uses the order number, and that's what you can always see. And when you click on this one, you will always see this description that automatically gets entered on that vendor invoice. It says, this vendor invoice was created to solely unaccrue that PO accrual. There's nothing owed to the vendor, but it did go ahead and post out that $10 pre-bill accrual. Okay, so if you're manually doing this, or if you're doing it from the, order line itself and you close the order, you're going to want to make sure that you post this vendor invoice. Okay, so it's nothing to the vendor, but it does close out that accrual. All right. Any questions at all about pre-bill accruals? And again, in your system setup, GL tracking options, pre-bill accruals, this is where the pre-bill accruals are set. So this one would be for purchase orders. This one would be if you want your insertion and broadcast orders to be separate. Okay. Otherwise, they can be the same account. All right. Account reconciliations. This is where a lot of people will, in their account reconciliations, they'll make sure that their statement balance is zero, which is great. But you also need to make sure that your book balance to ledger balance is balance. So when I go ahead and look at my last account reconciliation, my statement balance is zero. Perfect. Great. However, when I look at book balance versus ledger balance, they don't match. And I really want to make sure that these match, because one is telling me this is me running the balance sheet as of this date, and the system is saying you have 235,000 in there. My account rec, my book balance, is based on everything that I've put in here. My beginning balance, my what I've increased and decreases, any statement balance, and any uncleared transactions. It says, okay, this is what your balance is. And these two really need to match. Now, there can be some simple things that can cause the issue. For instance, I will go in and see sometimes that transactions are cleared after this date. So there might be a December transaction that is already cleared in here. Well, my book balance is including that December transaction, but my ledger balance is going solely based on 11/30. So you want to make sure that if you do, for some reason, have a transaction that actually cleared in November, but has a December posting date, that you want to go in and update that posting date before you clear it, because that will then make these two match. Now, another common mistake that happens is this receipt here says that it's in November. Great. When I look at the deposit, it has a deposit date of November. Now, remember that for account reconciliations, the deposit is what shows up in the account rec, not the receipt. It's a total of all the invoices or all the receipts that hit on that one deposit. That is what is showing up in the account rec. However, if I go and look at this receipt, it's actually posting for a month later. Again, fat fingered typed it. Well, this receipt, when I start looking at my ledger balance, is included in December. It's not going to post to the bank account as a receivable and reducing my accounts receivable until December. So when I look at this ledger balance, it's saying, hey, this money isn't in here yet, this 5,000. Although in my book balance, because my deposit said November, it's including it. So the best thing would be to open that rec, go back to this receipt, okay, unpost it, update this posting date to be the correct date because that's what it should have been. And I accidentally, again, fat finger typed and I post. Okay. What I also want to do is lots of times when I open a rec, I like to close it, let it fully refresh, and come back in. And now these two numbers match. This statement difference is correct. And now I can finalize it. Okay. So this idea that sometimes you have to open an account rec, and I mean, we're all famous for having 8 million tabs open. If you open an account rec and then go and work on a transaction and update it and then come back into the rec, especially if you're doing it in different tabs. For account recs, they are very kind of peculiar and very sensitive. I always suggest before you refinalize and reselect transactions, close it, open it back up, make sure that your selected transactions are correct, and then finalize it. So it can show some oddities if you're working and this tab is open and you're working on a receipt or something in another tab, and then you come back in here without letting it fully refresh. You can have some issues on that. Okay. Any questions about account recs, book balance, matching ledger balances, and statement differences or anything? All right. I will say too, and if I go ahead and open this rec for a moment, one of the things I like is that on our Today Accounting page, you can access your open account recs from here. But what I also do too is if I'm doing any troubleshooting, I can actually click on show completed account recs while I'm here and still see all of the other ones without having to scroll down here and find it in this list and go ahead and search. So that's sometimes kind of a nice thing that you can do is to look at those recs from up here and then still show only open recs. Okay. All right. And now, oh, I am out of balance. Why am I out of balance? So, goodness gracious, I did something. Oh, I must have changed. I changed that invoice, didn't I? Yes, I did. And let's see. Well, now that I changed my receipt, I now have an out of balance. And I'm not even sure why, but I will have to find out. And darn it, I'd love to have this account balanced. So I don't need you guys to watch me troubleshoot what I did here, but making sure that I don't have, oh, I bet you this one, it's posted. And let's go ahead and refresh it. Nope, it still didn't like it. All right, I will figure out my out of balance. That's what happens when you change things on the fly. All right. Month-end procedures, setting that close date. For those who don't know, you can change your close date here. Okay, so if I am completed with November, I would set this as a 12/1 date, meaning that I can post things on December 1st, but I cannot post anything prior to December 1. So this is an inclusive date. It means I can go up through November or 30th cannot be posted or unposted. December 1 and forward can be posted too. All right. Some of the other tips that I like to do is if I'm looking at any of my account balances and when you open these up, it will automatically only filter for this month. Sometimes that's a quick, easy way to review something within the system. We do have the new option now that you can actually multi-select your GL accounts. So let's say if I was looking at all of my multiple income accounts, I could come here and select multiple income accounts, take away accounts receivable, sorry. Select multiple of my income accounts to see all of those at one time and say done. And then I could go ahead and edit the date range at this point and say, well, I'm looking at, let's say, last month, and I can go ahead and search. Whoops. So I have nothing posting for last month, possibly maybe last fiscal year to date. And there, so I can see multiple. And if you do, then you will want to make sure that your account number is listed, because of course that will change as you go through. And you also have the ability to filter. So maybe I'm only looking at, let's say, client invoices. Of course, I'm in an income account, so I should be only looking at client invoices. But if I were looking at a bank account or something like that, then I could go ahead and um, just choose, let's say, payments. And I could search and just look for payments. Okay. And when we start talking about financial reporting, one of the items that is not listed, by the way, in the month-end procedures, and I'm thinking I really need to include it, is to run the overhead allocation report. Wow. So when you are on your Today accounting page, there is an overhead allocation details report. And this basically says, and I really think this should be run monthly. And so if I were to look at this, let's say for last month, and I'm going to look at all expense accounts, what this does is it will show you any expenses that come in to your COGS account, to your expense account, or to your other expense account that are not linked to a client or a project. So they are considered overhead. So I have this vendor invoice here that is posting to a COGS account, but is not linked to a client or a project. Now, that may be accurate. I have some clients who say, I will never have COGS expenses that are not linked to a client or a project. They will always be linked to a client or a project. This would be a great double check. Because when it's not linked to a client or a project, now it's suddenly not a billable expense to the client. Or even if you wanted to write it off or mark it as billed, it's not showing up for that client or that project. I have other clients who say, well, yeah, sometimes I can have some COGS expenses that are not linked to a client or a project, and that's okay. But it is a chance to double check what's going in here as an overhead expense. Now, this total cost of goods sold overhead for cost of goods sold account is going to show up in your client and project P&Ls when you start running for overhead allocation. And then this one here will show up in your overhead allocation. So if I were to run, let's say, a project P&L, again, I'm going to run it for the same period. So if I say last month, oops, not this month, last month, where is my last month? And I run my overhead allocation by hours. Now we'll go ahead and talk about the different options we have in here. But if I go ahead and run it for, well, let's first run it for none. Okay. And I go ahead and generate on the screen. What the system does is it takes just what I would consider the raw numbers of the project. It would say, here's your revenue, here's your direct COGS. Those would be expenses that have come in, vendor invoices, credit card charges. Here's your AGI for the client. However, if I go ahead and say, let's run it based on hours, what it's going to do is it's going to take those overhead expenses and divvy them up based on your projects. and based on the number of hours. So if I go ahead and generate this on the screen, I now have, whoops, do I not have uh, last month? Why don't I have any overhead allocation for overhead cogs? Oh, did I not have any hours in there? Oh, that figures. Okay, let me run it for a different period. Overhead allocation. Let's see if I do it. Let's do this fiscal year. Let's see what we've got in here. So I've got 825 of overhead allocation. What happens in November, December? I bet you I probably don't have any hours in here. That doesn't help. Hours and this fiscal year to date. And let's go on screen. Okay. Now I have some allocated cogs. So what happens is the system says, okay, you had these overhead expenses to COGS that had no client or project. I'm going to go ahead and take that amount, that overhead COGS expense, and I'm going to tell you all the hours that you put in for all the projects for the same time period. And then I'm going to say, but this project had 2.5 or 2.75 hours. So it's getting 7.8% of this number. So it's getting $64 out of the 825 as being, it's taking that overhead allocation COGS and it's giving it to this client and saying, we had to spread those expenses around between all the projects and we did it based on hours. Okay. Now you have different options. You have it based on labor cost, total bill. Okay. Hours is always the easiest for people to understand. I put in 500 hours this month and this project used up 100 of those hours. So it gets, like 5% of that or 50%, whatever it is. Not doing the math very well. Labor cost is really used when your employees have uh, very different hourly costs. I have a copywriter who he's pretty new and gets paid $25 an hour. I have a other copywriter who's been here for like 10 years and he's just awesome and he gets paid $50 an hour. Well, it's more based on who actually worked on it, what their hourly cost was at the time, and then divvies it up that way. And it kind of spreads it a little bit more based on your personnel and their costs as opposed to just total hours. I don't care who worked on it. We put in 100 hours. It got this percentage of those overhead expenses. Total bill says I don't put in hourly costs and we might not even track hours. Do have some clients who say, we don't track hours, we don't enter time. This is just what we build. This is what we build for this client. This is what we build total. Percentage of that gets allocated out. Okay. Now, when you do run your client P&L or project P&L, you'll notice that there's a field here that doesn't have an underline. And when it doesn't have an underline, that essentially means that you cannot drill into that number because it's a total of other fields. So you can actually pull out the allocated COGS and the direct COGS. So direct COGS, as you hover over, you can see it's all those vendor invoices that come in or credit card charges that are coming in. Allocated COGS is taking that allocation based on how you determine to allocate it and then divvying that up, and that's the number. And we always show you how we calculated those numbers. That is the total of your COGS. So it's direct COGS plus allocated COGS gives you the total COGS. And then, of course, agency gross income. Now we've got also the field overhead allocation. So again, if you're not seeing all the fields that you need, make sure that you go in and modify the report and bring in the separate direct COGS versus allocated COGS. Or if you don't have overhead allocation coming in as a field, make sure you bring that in so that you can see where those numbers are coming from. And again, if we look at overhead allocation, okay, this was the total of expenses. salaries, rent, utilities, coffee, office supplies, anything that went into that overhead allocation details report for an expense account will be in these total overhead costs. Okay, then once again, it does the same calculation. It's still the same 7.8%, but now it's taking this number, 7.8% off of this. Now, we always show you how the calculation is created. So if you have overhead labor costs calculated in here, we actually subtract that out because your overhead number up here includes your journal entry for salaries. So just to be aware of what the system is doing, we do provide you how that calculation is done, because inside labor cost is the hourly cost for the employee on the hour, but that's not actually what they got paid. So when this number includes salary, we have to remove the inside cost because now we've got the actual salary journal entry included in there. Okay. So project P&L, or even the client P&L, we have the same offerings here as to how you want to run those. If you're really running these reports and you're trying to compare your client P&L or your project P&L against your corporate P&L, then you must allocate overhead, because your corporate P&L is including, so let's say, again, if I'm looking at a single date range, and let's do this fiscal year, not next, this fiscal year. There we go. Sorry. The COGS expenses here would include those overhead COGS. So you cannot compare this agency gross income if it has overhead COGS. You would need to make sure that you run your client P&L to include overhead so that those numbers are included and they can match. If you're going to run your client P&L for none and not include overhead, then it is not possibly going to match your AGI, revenue COGS, if you have any overhead COGS that you're not accounting for in your clients and your projects. I hope that makes sense. So if you ever run your overhead allocation details report and it has nothing in the COGS, and that should never have anything in the COGS, then your client P&L and project P&L can be run for none, and your AGI will match what's on your corporate P&L. But if you have any overhead expenses to COGS, those are going to be included in your corporate P&L. And unless you run overhead allocation for client P&L and project P&L, they're not going to match. Okay. Any questions on that? I know that can tend to be a little bit confusing. All right, last one I'm going to cover here is if you have any, if you're running your corporate P&L, one of the things that you can remember is that you can actually create a custom layout in your corporate P&L. Now, in your corporate P&L, we can do a comparative, last year to this year, or 2 years ago to 3 years ago. You can do 2-year span or 2 different years that you can compare, but you can't go beyond that. However, we can create custom layouts that allow you to kind of create different versions on your own, so that this one is quarterly actuals, current year and prior year. And if I go ahead and show that on the screen, you can see here was my prior year, here's the first quarter, second quarter, third quarter, fourth, and then year to date total, and then I can compare it, and I can actually move these fields around so that quarter one is close to quarter one over here, so that I'm actually looking at it more based on quarters. If you've never run custom layouts, they are in your system setup. You can come over here to GL settings, corporate and profit layout options, and you have options to be able to go ahead and create them. And they're really not difficult to set up. We do have a help guide article on custom, I think it's called custom layouts, custom Google Financials, corporate and P&L layouts. Here we go. And it does talk you through and bring you through the steps on how to set up those columns. You can actually set up the columns directly in the corporate P&L. I tend to like to do it more from the layouts over here so that I can kind of start to create some new ones, and you can name it the way that you want. And then when you set this up, you're just kind of trying to tell the system, what's the year. This is an offset of last year. So if I run it for, let's say 2025, -1 would be 2024. If I run my corporate P&L for 2024, -1 would actually be 2023. So the system reads on your corporate P&L, what year are you running it for? That would be the zeros. And then -1 would be the prior year. So whatever that prior year is. And if you do have any questions or issues on setting some of these layouts up, you can always reach out to your account manager, and they're happy to go ahead and set some up for you and help you get these organized. It is pretty simple the way that they work. You have a source. Okay, so you can label the field the way that you want it. Is it a quarterly? Is it an actual? Is it monthly? Is it last year? Whatever the label is going to be. Is it based on actuals, or is it based on a budget amount, which we can go and read your financial budgets and pull those in? Or is it based on a calculation? So for me down here, it's just basically column 10, current year total minus prior year total, and there's the calculation of the difference. It can't do any real fancy math. It can't do any case one scenarios. It basically is very simple, that it says, take column 10 and subtract column 5. And that's my current year total minus my prior year total, and I can see a difference. Now, I could have done that for every quarter. Quarter 1 current year minus quarter 1 prior year, and I could create those calculations. And then of course I can set those fields so I can actually drag and drop these over to where I want, so that the current year total, prior year total. Now when you drag and drop, you have to notice that suddenly your calculations change. So now I'd have to actually go in and say, current year 9 minus 10. So is it current year minus prior year, or is it prior year minus current year? May give you a positive or a negative depending on which way you set that calculation. All right. Hopefully this kind of covered everything that you guys were looking for, and hopefully if you do have any questions, please do not hesitate to reach out to your account managers. As soon as this recording is done, we will go ahead and post it up on the help guide. So if you come into Workamajig and you come into those webinars, we will be posting that webinar out here and linking the recording. All right. And hopefully this answered some of you guys' questions, and I appreciate you guys attending. Thank you very much.